Have you ever felt like you're a step behind the big players in Singapore's stock market? The Straits Times Index, or STI, hits new highs, but by the time you act, the chance is gone. If you've wondered how to catch the next big market wave instead of forever running after it, this video is just for you. Here's the straight up truth. Most people are laser focused on giants like DBS and OCBC, but something much bigger and quieter is brewing under the radar. The real catalyst, one that could change your wealth journey for years, isn't in those headline stocks. It's about a massive $1.1 billion move by the Monetary Authority of Singapore that's putting serious fuel behind the little guys, the small and mid-cap stocks. I've boiled down this complex shift into 7 must-know ideas that you can use right away, especially if you care about growing your wealth right here in Singapore. Before we dive in, hey friends, welcome back. I'm Iggy. I cover everything from stocks and finance to CPF and trends driving wealth in Singapore. The investing Iguana was ranked 8th in the 2024 Influential Tigers list by Tiger Brokers. We just crossed 1 million reads and 58,000 likes. With over 900 videos and more than 500,000 watch hours as of June 2025, it's all about helping you take your Singapore investment game further. Now let's break down the 7 key ideas and how they could change your future. First, the big program. It's called the Equity Market Development Program, EQDP for short. This isn't just talk. In July, MAS began deploying $1.1 billion to 3 top fund managers. That's Evanda, Fullerton, and JPMorgan. Their mission is clear. Bring real liquidity to Singapore small and mid-cap stocks. Think of this as a turbocharge that could finally bring these underappreciated companies to the spotlight. Over the whole cycle, there's up to 5 billion Singapore dollars in play. For Singapore's market, especially the forgotten names, this is nothing short of transformative. Second, let's talk about why liquidity, or volume, matters so much. In property, when more buyers show up at a condo launch, prices climb, right? It's the same with stocks. More money and activity means narrower price gaps, better price discovery, and suddenly, the ignored companies get a chance to shine. Singapore's small caps have struggled with little trading. This wave could change that forever. Third, who are the major winners? This is where it gets actionable. The analysts at UOB Kay Hian have identified 10 companies most set to benefit from all this new cash and attention. You've got Food Empire, UMS, Valutronics, Sheng Siong, PropNex, and others. Think of this list as a cross between value and growth plays, companies with healthy profits and balance sheets, not just penny stock flyers. Many are still trading below the wider market's valuation, which means you aren't paying for hype. Fourth, what makes these names so worth your focus? Simple. Strong dividends and healthy returns on equity. To pick 2 examples, Food Empire offers almost 6% in dividend yield, with global sales and a robust export business. Valutronics, an electronics manufacturer, has no debt and returns about 5% in dividends. And PropNex, which leads Singapore's property agency market, delivers more than 20% returns on equity, a very rare number. Let's pause here for a second. If you want to dig even deeper, charts, raw data, and full breakdowns for all these stocks, check out the Investing Iguana Substack blog. The full write-up, complete stats, and all of today's tables are there, ready for you. You'll find the link in this video's description. Fifth, how about harnessing the Singapore system to your advantage? With CPF and SRS, many of these stocks are CPF investment eligible. That's your chance to tap into your retirement funds for this trend and maybe even multiply your results thanks to time and compounding. If you invest with SRS, the program runs over several years, so you've got time to let it mature, and that 5% SRS top-up can soften bumps in the road. Sixth, what's a practical step-by-step game plan? It boils down to thoughtful action, not wild bets. In the immediate term, start by building core positions. Pick 3 to 5 high-conviction stocks from the EQDP list and get in before heavy institutional money drives prices up. Focus on those with healthy dividends, so cash keeps rolling in while you wait. And keep an eye on daily volumes. Big surges almost always mean funds are starting to buy. Next, in the medium term, as signs of real fund inflow appear, you can safely scale up. Look out for new small cap funds the selected asset managers might launch and add those if they fit your style. Manage your position sizes. Remember, small stocks can swing a lot more than blue chips, so don't overcommit to one name. Seventh, there are always risks, so let's lay them out plain. The biggest, in this case, is execution. Will the asset managers direct funds in a way that truly raises the tide for all these stocks, or will some be left out? The global economic climate is another factor. While Singapore's economy is solid, shocks can hit anyone. And if expectations are too high, stocks may be priced for perfection already in some cases. The main rule, diversify and stick with companies whose businesses you understand and trust, even if you did not hear about them in headlines before. Now, here's my personal take on all this. This move by MAS is, to me, the clearest signal since I've started covering Singapore markets that the government wants a deeper, broader, and livelier stock market. It's a bit like upgrading our MRT system. The impact is slow at first, but in a few years, everyone feels the difference. If you only chase blue chips at high prices while ignoring what's happening beneath, you could miss the cycle's biggest winner. I'd say if you invest with CPF or SRS, focus on the stable dividend payers, real demand, and Singapore core. Watch for new funds and keep an eye on trading volume. Big money always leaves footprints. If you act with conviction, and not just follow the herd, I really believe this could be the period you look back on and say, that's where my portfolio finally broke out from the crowd. To recap, today you learned the essentials of MAS's liquidity program, got a map of the stocks most likely to surge, saw why dividends and solid balance sheets beat hype, how CPF and SRS can give you an extra edge, and picked up a common sense strategy to tackle it all. We even addressed the real risks so you know what to watch for. What do you think? Would you move early, or do you want to wait for more evidence? Share your view in the comments. If you found this session useful, give it a like, share it with friends, and subscribe to the Investing Iguana so you never miss out on future analysis. One last thing, and this is for those who really want an edge. Premium members get exclusive early access to all our videos, sometimes a full week before anyone else. You'll be the first to get detailed briefs, urgent analysis on fast-moving markets, and new strategies, straight to your inbox. It's just $1 a month, less than a kopee. Make it your daily source of financial fuel. If you're ready to get a jump on everyone else and join the inner circle, follow the instructions in the video description to become a premium member right now. And before you go, if you want even more hands-on tips, check out my recent deep dive on maximizing your CPF for lifetime income. It's one of our top videos and the perfect next step after this one. I'm Iggy, wishing you clarity and success in your investment journey. Until next time, take care, invest smart, and remember, sometimes the best path is to look where others aren't.